Okay, guys. Hopefully my mic is working. Anyway, welcome back to the channel. It's currently 9:15, so we have 15 minutes before the opening bell. So just getting dialed in here. Took one trade this morning, but it wasn't even worth it. I had some technicals that I saw on the MES, but it just didn't pan out. A lot of times in the futures market, in the pre-market especially, the moves just don't really, go as planned all the time. Excuse me. Even in the regular session, it could be kind of choppy, but especially in the pre-market, there's just that lack of liquidity. All right. So I'll just show you guys here what I was looking at in the pre-market on the micro. As you can see, one trade for break even. When I got in was right here. So you can see here on the 1 minute chart very clearly we're trending, making higher highs, higher lows, higher highs, right? This is where I got in. I got in right here for a long. Now, maybe I was too greedy. I wanted to take my profit, which would continue the trend, right up here. So I set a sell around 3993. It got to 399250. All right, so that just happens. That's the way it goes. This right here, this wick up just a little bit further, and I would have been in a nice risk to reward trade, getting in right here. I mean, it really was a decent setup, especially on the 5 minute. I'll pull up the 5 minute chart here to show you guys exactly the trend line I drew out. So I'm watching this and I say, it's before right here. So it's trending up. We currently have 3 candles that were red, looking for a bounce. That bounce never happened as expected and continued to sell off. But I'm glad I took the break even, because then I would have been down, a little bit more here on this wick here. I mean, just look at this here at 8:55. This candle goes all the way down to 39.84 on the MES, and then this next candle, which is the 9 o'clock candle, goes all the way up to 39.91. Now, so many times trading, especially trading futures on these key time frames, so not time frames, but on these key times of the day, 9 a.m., 8 a.m., 8:30. These times, sometimes there'll be some orders that are already in the system waiting to go. So you can see some real moves. So I do recommend, be careful trading around the whole on the hour. And we're just pulling back a little bit here. What's going on, buddy? Just waiting for some more to pop in here. We got 11 minutes to the bell. 11 minutes to the bell, and we might as well, let's take a look at the earnings for the week. I'll just keep it up here for a minute. A lot of retail. Yeah, I saw that. 3992, 3993. That's definitely that pre-market resistance. We'll see what happens. So the earnings right here for the week. Economic calendar for the week. This is always very, very important. You need to know the times of the day when things are coming out. Not just in the US. If you are trading futures, if you're trading pre-market, you need to know what's going on overseas. So if they have something big and you're in a trade, like the UK on Wednesday, this is a perfect example. The UK CPI, all right, that may make the futures market move. And this won't show up on just your US economic calendar. So, do your due diligence. This is just a small economic calendar, but you can find bigger ones that really have everything in it on, I think, investor.com. It's pretty simple to find out. I think it's investing.com, actually. You can find it's got everything for the week, literally everything from every country. But just seeing the major ones, the Eurozone, the UK, the US, that's really the big ones right there. So that's the economic calendar. I'm going to take a look at this on the 30-minute. Yeah, I see what you're saying. It's basically, right here, the resistance. We can put that in just so we know where that's going to be. There might be some resistance up there. But like I was saying in my weekly watch list video, that on Friday, right? On Friday, the bond market was closed. So after CPI came out, you had this huge drop in yields, all right, on Thursday. The bond market was closed, you can see right here, was closed on Friday. So you had these huge moves on the yields dropping really, really big. So something I said coming into this morning, there's a possibility, a potential for a gap down in the equity market. Now, why would that be? Because the bond market was closed on Friday, that gave us, and the equity market, a breather of having to trade against the bond yields. All right? Because you guys know when the bond yields are going up, the equity market's going down. So the bond market never had a chance to correct those massive, massive moves. A lot of times, and you guys know this, the markets don't just go straight down or straight up. There's always a little bounce there in between. So, coming in today, not surprising at all that the equity market is in the red to start. Now, there's only 6 minutes to the bell. This can reverse and continue to go down. The dollar can continue to roll over, but you see a little bit of that bounce. You see a little bit of that bounce here on the yields. And the VIX, up almost 6% this morning, is a pretty big move for the VIX. Now, when the VIX goes up, that's not great for equities, right? So the fear index, the VIX, up almost 6% is a pretty decent move. Not surprising, like I said, with the yields, with the dollar, not surprising at all. So we're just going to sit here. We're going to be patient. We got 5 minutes to the bell. Don't like to take any real opening drive plays here. I'll do it if I see something that I like, but most of the time it could be a real just gamble. Very, very choppy start to the day. Just totally expected. The SPY, take a look at that. I want to take a look at the SPY actually on the daily chart with our indicators in here. There we go. So the daily chart on the SPY, the daily chart on the S&P 500 for the year is trending down. Doesn't mean it just keeps going down forever. This right here, this chunk of trading is very, very, very similar to this chunk of trading right here. Just take a look at how similar that is. Even with the cross of the 20 EMA, the cross with the 20 EMA happening right here, right over this 50 moving average. The last time it did that, we saw continued momentum, right? So what we're seeing here back in this summer rally, it based out, broke out, retested, and kept going. Same thing here. Based out, broke out, retested, kept going. It is extended though. You have to realize that it's extended. Now, while everybody sees this as the most clear and obvious area for the market to go up to, the downtrend line for the year, the 200 moving average, that to the penny rejected and started this massive move down. Now, with the move down, you get the bounces. With the moves down, you do get the bounces, and then the moves down. So, while you're in a bear market, you can still see some really, really big moves. The S&P 500 had a huge move off of the lows, just about 14, 15%. For the year, the S&P 500 is still down 16%. But right here, I would say is just a clear area that the S&P 500 can get to before it sees that resistance. Now, like I said, we're extended. We may pull back a little bit. There could be some buying opportunities if the market does pull on back. So, just going to watch this. Like I said, it's very similar to what happened here. And we can take a look at the Qs. We still have 2 minutes to the bell. So trying to get this in quick before the bell rings. I like to see the open on the 1 minute chart. So the Qs here, same thing, right? But what you see is a bottoming type of pattern. It didn't want to go any lower. You can see back here, it didn't want to go any lower. You could see with this one candle here, nope, don't want to go lower, comes up, rejects the 20, comes down, CPI blasts it off. The market was looking for good inflation numbers. That's not a surprise. With good inflation numbers, you will see the bond yields go down. That's what the equity market wants. But we are far, far from our inflation target. The Fed is far from stop raising rates. So, while we might see a nice bump up, these stocks that make up the NASDAQ are still going to do poorly in a couple of years of this type of rate hiking that the Fed is doing. They're going to keep rates higher. They're trying to kill demand. They killed demand for the housing. And for the CPI, we saw demand start to wane on the used cars, which was really good to see. But everything else, you go to the supermarket, you go out to dinner, you go buy anything, right? I just had my oil tank filled here at home. It's crazy. It's crazy. That is still going to affect the economy going forward. Here we go. We got the bell. Let's see what we're working with. I got the SPY down here. on the SPY, I just want to mark out that pre-market low. Came down to this area here. See what happens. Amazon down 2%. VIX now up over 6%. We had $1 a share move there on SPY on the open, this 5-minute candle. Here's the dollar up here. VIX coming on down a little bit as the market pushes up. What stocks are you guys looking at? Anything today? ExxonMobil? So this is very similar to the XLE, right? This is something I posted on our weekly watch list, that the XLE is starting to top out. What that does for this, ExxonMobil, who knows, but this is a nice pattern here, consolidation for a breakout. That is a nice breakout attempt going on here. The only thing is we have to watch the XLE. Right here, the XLE is at, for the year, previous resistance. If we look at this on the weekly chart, you got the double top on the year, you also have a head and shoulders. So a shoulder, a head, a shoulder. Just wondering if it's going to either break out or if it's going to start to sell off. Now back here, it sold off pretty immediately. Right here, came down, CPI, and now it's kind of sitting right there, the XLE. But, it's consolidating. It's consolidating under the previous resistance, which is good. That's good to see for a potential breakout. And even with oil coming on down, it's still high per barrel, but it's the energy is still holding up really well, even with the price of oil that was hitting like 120, whatever it was, 120, 130, now back into the 80s. It's still held up really well. This has been a trade that has been great for the whole year. We called out XLE on January 1st. January 1st, we said XLE energy, that is the play for the year. So if you're in our Discord, you know that. January 1st, and this has been obviously the best, one of the best plays of the year. There you go. That's a nice push up there. Like I said, we're coming into resistance. But if you were going to take a trade long here, I would say if you're not swing trading, this would be a good spot to take profit. You can always get back in, right? If it breaks here, you could do a retest and then it could go further. But if you got in right off the open, where are you taking profit? Most likely, a lot of people will be looking at this as the first spot for resistance. Yeah, Benjamin. So that's, trading the stocks, individual stocks, you also have to look at the sectors, right? We have to know what the overall sectors are doing, if they're coming into resistance. And that's the way I also like to trade. If I'm trading stocks, I don't want to be buying something in the S&P 500, let's say, if it's coming right into resistance, right? I want to at least wait. Yeah. Yep. This was also dividend day, so this caused it to open a little bit lower. 91 cents per share. Chopping around in a range right here on the MES, looking at the SPY, holding up. It's holding up even though we're down just about 0.25%. The VIX definitely pulled back over 1%, which is good for the bulls. Gonna break out. Nice push. SPY coming up to that pre-market pivot right here at around 398-ish. SPY just about to the penny there on the pre-market right here. Just about. And it pulls on back. Normal. This is the way people trade, right? Where's your first profit going to be? It's going to be at these pre-market levels. Where are people going to look to buy if it's going to be on a bounce? At these pre-market levels. And that's just the auction period, right? The first 15 minutes, the first half an hour of the day is just market makers, just orders, just people sorting things out before direction starts to become clearer for the day. And sometimes it doesn't get clear. Sometimes it remains choppy. Sometimes you get in that range. And we're definitely doing that. You can see the consolidation here. Definitely consolidating. If this is a little bit of on the 15-minute, if this is a little bit of a head and shoulders pattern, you have the head here, you have the shoulder here, right? Very clear resistance, very clear resistance. If this market sells off a little bit today, you have the possibility of coming on down here. I mean, do I think we're going to fill this gap here from CPI? Probably not. There was a lot of volume on Thursday. That's a lot of institutional buying or covering, short squeezes, all kinds of things. But that's a clear rejection here of this area, this 390, 3993, like was said in the chat. Really, really perfect. Very nice call. Very nice call on this rejection here. But what are we doing? We're just chopping around. We haven't made a lower low yet. We have made a higher high, but into resistance. That's why this trading is very difficult. Let's see what XOM did. So it hit resistance and then started to fade here. XOM though is still over VWAP. So be careful of that. You want to see VWAP break down with the market as well. This would have been a good scalp up here at previous resistance, like we were saying, around the 114. That's a nice little scalp there. There you go. Looks like the SPY just dipped below. These are huge 5-minute candles. Well, I guess we've seen bigger, but that's what you call an auction, right? So you see it going up, oh, we're going to break out, and then all of a sudden, in one 5-minute bar, you're all the way down here at the trading day low. So we'll see what happens. Nice, Benjamin. Nice, nice, nice. Be patient. Be patient. I like that. Love the patience. By the way, trading, guys, you gotta learn patience, especially in a market like this. As XOM just broke VWAP pretty clearly. We'll see. VIX kind of just holding steady. Still up over 4% on the day. The dollar. Guys, look at the dollar. The dollar making a move. This is a big move here on the dollar. This can definitely be the reason why the market is having a very tough last 10 minutes. Look at this move on the dollar. So when the dollar goes up, not great for equities. When the dollar is rising, that hurts corporate earnings. These are things that are just traded together. They're built into algorithms. So when this goes up, the algorithm starts shorting the market. So you just want to be aware of all this different stuff. The dollar, the VIX, the yields. Those three things have been a really clear correlation with the market. And in this case, an inverse correlation. SPY looks like it bounced off of one of our key levels here. Keep in mind that bounced off a key level. And here comes the dollar coming down. Nice job. You have a good day too. All right, guys, I think probably just going to shut it down here. I hope that you guys all have a great start to the week. Manage your risk, and I will see you back on the next one. Don't forget, hit that thumbs up for the video. Take care, guys.